And we're live. Welcome to the Reverse Mortgage Podcast. I'm Bill Gross, your host at Bill Gross Probate Nationally. And we do the Reverse Mortgage Podcast weekly, where I interview top originators around the country as well as vendors to help us learn how to be better at providing the service to our customers and working with our referral partners more effectively. Really excited to have today not just any originator, but really one of the legends of the industry. He is the reverse mortgage director at Movement Mortgage nationally, Harlan Accola. Harlan, thank you so much for joining us today.
Hey, it's good to be here. Thanks for the opportunity, Bill.
So describe a little bit, what's the role as the reverse mortgage director at Movement Mortgage? More than just originating, you have a bigger role than just that. What's your role there?
Yeah, I brought a team over to Movement a couple of years ago that has really been assembled over the period of the last 20 years. Top originators, top operations people, that goes all the way from setting appointments to funding and closing. And so I manage the overall team, but I'm really more on the sales side and work with our retirement mortgage professionals, which is what we call our loan officers, because they're only allowed to do reverse. They are specialists in reverse only. And so at Movement, I also train our 1,500 forward loan officers so they understand what our division can do for them in working with their real estate agents, their professional partners with attorneys and financial advisors, and of course, their clients that are over 62 years old.
One of the biggest challenges we have in the industry, if I was to ask 100 mortgage originators, can you do a reverse mortgage to my client? I think 99 would say yes, but maybe 3 would have done one in the last year, let alone been experts. Now, Movement Mortgage, one of my favorite national mortgage lending companies I've worked with since they were founded, I think, has a unique approach to this program where you really only have certain people who are approved to do reverse mortgages, and then the forward mortgage lenders refer the leads to them. So talk to me about how that helps provide better quality service to your customers.
Yeah, the average forward loan officer who says they specialize in reverse do less than 2 loans a year. Those that are supposedly full-time reverse people do less than 10. We're disappointed when our people would not do 5 in a month. So that's all they do. They're very familiar with the financial planning aspect, working with financial planners on everything from sequence of returns risk to Social Security and long-term care issues, life insurance, annuities, so on and so forth. So they can provide a much better service. And especially when it comes to closing the loan, we can do purchases inside of 17 days of calendar days from the time that we receive a final offer, an executed offer. So it gives the client a far better experience. We've dealt with people that have got a reverse mortgage and they don't even realize how to get tax deductions with their reverse mortgage. They were never taught how to use the reverse mortgage. They were it originated and then the originator went away and went on to the next scenario. We work with our clients on an ongoing basis every year where we follow up on them and sometimes more often, but certainly on the annual mortgage review to make sure that they're in the right loan and that they're using it correctly. And especially when it comes to tax planning, that's a huge issue that is misplaced all the time in reverse mortgages.
So to me, it seems the reason I did this podcast, I'm a probate real estate broker working with national attorneys and estate planning services and vendors, but the reverse mortgage came up on 2 sides. One is it's so underutilized. As a real estate broker, it seems to me there should be 10 times more reverse mortgages done than are, but for the lack of knowledge, education, and the poor reputation the industry has. So obviously the podcast here today hopefully is helping get the word out, the education. Talk a bit about how consolidating the experience will create a better experience for people so they're more inclined. And I think particularly you have the forward mortgage lender originator who maybe has the relationship with the attorney, the relationship with the wealth planner, bringing in the reverse mortgage specialist who does a great job, but you still have the relationship with your company through the forward originator, if I understand the process correctly.
Yeah, that's very true because we leverage that, let's say, not only a relationship, but that ongoing professional business that they're doing together. We're leveraging that to increase it for both the referral partner and the loan officer as well, because we increase the business for realtors. I mean, half of the market people my age. Over 60 is now, of the baby boomers, is now half of the real estate market on both buying and selling side. I think it's like something like 44% or whatever of buyers and 57% of sellers, something like that, according to the National Association of Realtors. So it's a huge part of the market. And yet most realtors do not know how to market to people like me, and teach us how to buy a $750,000 house for $500,000 or $400,000, depending upon our age, to be able to sell our old house that has a 3% mortgage on and move up to the other house without hurting us financially. And so we teach that real estate agent how to get more listings, and also, quite importantly, how to just simply increase their business and get more clients overall. That's really the key to the whole scenario, is let us help them build their business. We do the same thing with financial advisors, because millions of people, there's 72 million of us baby boomers by 2030, millions of us are sending money to a mortgage that doesn't have to be paid anymore, instead of giving it to our financial advisor.
Right. If your financial advisor can't beat the interest rate that's being charged today, they probably shouldn't be your financial advisor. And I'm not talking about beating it by using some exotic investment strategies. I'm talking about using some good standard, average, long-term investment strategies that will make it available. So I'm going on, as well as liquid. One of the reason I did this also, with eXp Realty, I have a downline of 40 plus agents. I have a platform with thousands of realtors across the country. If I asked half of them, do you know how to help your client buy a property using reverse mortgage? Half of them have no idea whatsoever.
Well, half of them don't know that it can even be done. They think, because this is a when reverse mortgages first came out, you could not use a reverse mortgage to buy a property. So most realtors just wrote it off because it wasn't part of the selling process or buying process. That changed about 15 years ago when HECM, H4P, reverse mortgage for purchases, became available. And at that point, it was just a matter of how much is the down payment. Do you bring 40%? Do you bring 50%? Do you bring 60 or 70%, depending upon your age, from the previous house that you sold, bring that into the next one, and then use that as a down payment, and then movement mortgage comes in with the difference, and then with no required payment for the rest of your life until you pass away or move from the house. So literally you can spend $600,000 and buy $1 million house, or $300,000 and buy a $500,000 house. If you're in your 80s, you could use $250,000 to buy a $500,000 house, or $500,000 to buy $1 million house. That is a very significant issue, because when a realtor comes to, or when a client comes to a realtor and says, hey, I'm looking for this, I don't want a mortgage, so I want to pay cash for it, and they say, all I've got is $500,000. And if in that neighborhood, they can't find a house for less than $750,000, $800,000 that they're going to be happy with, there is no sale for that realtor. And the client's not going to move, because you can't satisfy them. But if you can show them how they can supercharge their down payment to be able to get a mortgage with no payment, because I'll say, well, I don't want a mortgage. They don't want a mortgage payment. We got to clarify that.
Correct.
And there's a big, big difference. So that is really the issue that we try to educate realtors on, is there are millions of us that want to move. We're in the wrong house. The U.S. Census Bureau estimates that of the baby boomers, more than 80% are in the wrong house. It's too big. They have too many stairs. They need too many repairs, and they should sell their house and move, but they don't want to because they got their house paid off, or they've got a 3% mortgage. Those are the people that should move.
Well, or another way to look at that is before they get to that point. I'm one of those people before that point. I'm going to have the wrong house, in that our master bedroom's upstairs, and my wife and I are both in our 60s. Today, it's not a problem. Today, probably it's a good thing to go up and down stairs, but there'll be a day, maybe next month, God forbid, maybe 10 years from now, if things go well, that will be forced. We have, 2 meter rooms, so we use one bedroom for a nursery and the other one for my office for now. So for now, we make it work. But at some point, I won't be working. At some point, we won't be having the kids stay over at our house in a nursery environment. So these are things that we could get a reverse mortgage ahead of time, but not access the equity because we don't need it, but have it available where we could basically write a check. And that's where the line of credit comes in. Now, I know there's a fine line between getting reverse mortgage equity line when I'm really moving the next day, that's fraudulent. I'm supposed to live in the house. But if my plan is, I don't know when, but somewhere in the next year to 10 years, I'm likely to want to move. But in the meantime, I like to have the equity available. Talk about the power of the equity line to give you flexibility for when you do want to make those changes.
Yeah, now we're kind of switching over to the refinance of the reverse mortgages compared to the purchase. So if I'm in the house that I already want to stay in, there's only two types of people in that group. The first group have their house paid off. They have no payment. They don't need the money. And then the other group of people, they still are making a mortgage payment. Let's talk first about the people that have their house paid off. All kinds of people say, I've got my house paid off. I'm done with mortgages. I don't need any mortgage. Why on earth would I even look at a reverse mortgage? Because I don't need it. You ask anybody, any group of people, and say, when is the best time to borrow money? Everybody knows when you don't need it. Yeah. It's an automatic answer. So then why don't you? Why are you waiting until the retirement car is smoking on the side of the road before you're going to decide to say, oh, I need some money? Because you might not even be able to get it at that point. You might not be in a position where you can qualify. You might not even be in the right house. So what we do is, let's say somebody has a $500,000 house and they qualify for a $200,000 mortgage, obviously in a cheaper area than where you live in California. So we give them that $200,000 mortgage, and they don't have to pay anything other than the closing cost to get it. And then that $200,000 goes up by whatever the current rate of interest is, which currently is about 7%, like a 30-year mortgage rate. And so every year, next year, it's available as $214. The year after that, $230, and the year after that, $245, and so on and so forth. It just keeps going up, and more money is available. My dad never used it until they needed it for long-term care. Kind of a sad way to use it, but the bottom line is that you want to have that money available when you might need it in the future. So you set up that line of credit. And then as things come up, you need a new car. You want to go on vacation. You want to help your kids buy a house. You want to help one of your grandkids buy a house. You want to travel more and enjoy life. You want to take money out of your house tax-free instead of taking money out of your stock portfolio that just went down this week. So you have all kinds of different uses, and it is proven mathematically, Bill. And when you say it's underutilized, you're not kidding. I mean, the number of people that should get a reverse mortgage that don't have it is foolish, because when the financial planners and the think tanks got together and ran thousands of Monte Carlo simulations, which financial planners do to see what the probability is of success for retirement from a financial standpoint, they found out that most people, more than 95%, should get a reverse mortgage the day they turn 62 when they don't need it, so that they have access to that money and that it's liquid going forward, that when they need it, they can get it. Because when you think about it, the money in your house, equity in your home, is worthless. It has zero value. And people say, well, that's kind of an insult. I've got $1 million house and it's paid off. What do you mean it's worthless? It has zero value until you turn it into cash. And the only way you turn it into cash is with a mortgage or by selling it. If you sell it, you got to move. So if you do a mortgage, you got to pay the money back, unless you take the money out in a reverse mortgage, which gives you that liquidity that now I can do something with it. You know, in your area, you just had the wildfires. People had a ton of equity in their homes, and some of those homes are now ashes, and they're waiting how long before they can rebuild it? If somebody had a reverse mortgage, they could pull money out of that reverse mortgage, even though their house is in ashes. The same thing happened here in Florida with all of the hurricanes and the Carolinas. And you want to have that money liquid so that you could use it, because cash you can use, equity is worthless.
And so for every real estate agent listening to this, what he just said was, every customer we have that has a house with either free and clear or with a large amount of equity should have the line of credit in place as a protection in case of fire. Or, you know, I had clients who do the fires, moved mom out to, a facility, or getting ready to move her to a facility, and we're going to sell the house to pay for it. Unfortunately, the house burned down before. They're stuck, versus had they had a reverse mortgage, they could write a check for some of the equity, maybe in their case, maybe $500,000, would probably get the job done. And so I think as real estate agents, we too often just want to talk to people when they want to sell the house, but we want to be the people there helping them plan for that sale. How do you get involved with people when they sell their house, either when your client's passed or the client's moved out to a facility? The answer is help them before then. And one way to do that is introduce them to the idea of the reverse mortgage line of credit, get them to a great professional. In this case, Movement Mortgage has your local professional as well as Harlan available to walk them through the options and the reasons why they might want to do that and integrate it with their estate plan. But to get that line done now, so you are, as the real estate agent, the resource that solves their problem before they have a problem. And that's one. The other one is, in case they want to buy, like I said, in my case, we're not going anywhere for the near future. But if we wanted to buy, let's say to Florida, where I used to live, if I had a line of credit set up, I could probably write a check for $500,000. That would almost pay for the house in Florida, condo. It'd be smaller because we're older, or I could supplement with cash to buy for cash what I want. Instead of having to sell my house and have a dual escrow, I could just close when I want and then sell the house, when it trails. So as realtors, this is a product we should be very involved with. Yes, of course, the purchase product, number one. Number two, though, the line of credit is the service to our customers that puts us in position to be there for them later on when they want to. Now, Harlan, you talked a little bit about the regular reverse mortgage where they pull money out, either pull out equity, lump sum, and or on a monthly basis. Talk a little bit about how to effectively integrate with estate planning and with wealth management to make that like a holistic solution rather than just a lump sum of money sitting in a Bank of America checking account.
Yeah, well, let's think about for a minute, how many times has a real estate agent said, you can use real estate to build wealth? I mean, that's just kind of an automatic. There's no real estate agent that hasn't explained that to a client. You should buy real estate so you can build wealth and do it early. All of us have heard that. All of us have said that to clients in the mortgage industry as well. The other day, I had a whole bunch of realtors in the room. There were 40, 50 realtors in the room. And I said, how many of you are financial advisors? One guy raised his hand who was a financial advisor. All the rest of the realtors did not raise their hand. And I said, all of you are financial advisors. Do you realize that you've helped my generation build $14 trillion worth of wealth in our homes? Right. That's how much equity is sitting at home. You are, you for sure are someone that is an advisor in regard to real estate. In fact, you've done a better job. There's more money in real estate equity than there is in IRAs. Yep. So you've done a better job than the financial advisors, in a sense, in the way that you look at it. Yeah. So how does that fit into retirement? I mean, if I came to my financial advisor and I said, hey, Jason, I gave you a bunch of money in my IRAs and my annuities and everything else. I'd like some of it back. I'm retired now. And Jason said, oh, no, you just keep sending me money. And when you die, I'll give it to your kids. I would be really upset. I'd fire that advisor. But that's what we do with houses. Just keep sending us money. And when you die, we'll give your house to your kids. And hopefully it's paid off. That doesn't make any sense. Why can't we use that wealth? So what we need to be thinking of and educating our clients so that we create more value. Somebody said the other day, knowledge is free. You can get it off the internet and AI and everything else. Wisdom is not free. So if you want to be a trusted advisor and you want to teach people how to use their equity, they're not hearing this from other real estate agents because the other real estate agents hasn't even taken the time to listen to this podcast, go to a CE class, or learn from us. It's difficult for us sometimes to get more than 20 realtors in a room because, we're not into reverse mortgages. When you incorporate the wealth of real estate into helping grandkids, helping the kids buy a house. We have clients taking money out of their immense housing wealth and giving it to the kids because it's tax-free to get money out of reverse mortgages, and then they can give it to the kids tax-free, and the kids can use that as a down payment to buy their own house instead of waiting until you die 20 years from now and getting a house then. So there are so many things that a real estate agent can do is how does this fit in with your income for retirement? How does this fit into your tax situation? How does this fit into your estate planning? And they can be tremendous financial advisors from the real estate perspective. And we help educate realtors so that they understand that from soup to nuts so that they know how it is that they can be of help to their clients.
I think so many people in business focus on their silo alone. The real value is when you can integrate what you do with one or two or three other pieces, then 1 + 1 is 3, 1 + 1 = 5 or 6, because you're creating more value for the other pieces as well. Everybody who's watching this, if you're a real estate agent, you should be reaching out to Harlan and or your local certified real estate reverse mortgage professional to get this information out to your clients so they know about buying using reverse mortgage. So they know about preparing with a line of credit. So they know about perhaps activating their equity into their estate planning plan. Because in and of itself, the mortgage is valuable. In and of itself, as a realtor, we're valuable. But if we work together with other professionals, we make ourselves more valuable because we create more value for our customers. And I know Harlan has some great material on his website on reverse mortgages. You can repurpose it. I'm sure he'd love you to link to his website and share that content as well. And that's why we do these calls. Harlan, talk a bit about, I know you work with real estate agents across the country, as well as wealth planners and attorneys and other business people. Talk about what are the best practices of those who build their business using reverse mortgage as part of it. What are some of the practices one should use to help get the information out? I'm so convinced it's really a lack of education and bad information, and want to really encourage people to participate. What would you recommend, or what do you see other people doing that's effective to get information out on this product?
Well, the first thing is obviously what you just said. Reach out and get educated. We have we have CE classes, but we also have just general information. I wrote a book on the subject. My coworker also wrote a book on the subject. We'll share that with interested parties for free. Our goal is not to sell books, but to educate people on reverse mortgages. So make sure you understand first, and then be realistic about it, because Bill, the fact is that some reverse mortgages are bad. And we need to make sure that we're helping a client. There are loans out there called shared equity loans. And that sounds nice because you're sharing and it's equity.
Sure.
That sounds nicer than reverse mortgage.
You're sharing your equity with somebody else.
Exactly.
Not good.
That's all right. You're not sharing it with your family. In fact, I wrote a chapter in my book about this called Sex, Drugs, and Reverse Mortgages. And that seems to be the most read chapter. People go to chapter 6 first. It's not chapter 6, it's chapter 6. But anyway.
Are they looking for the sex, the drugs, or information about reverse mortgages, though? That's the key.
Well, hopefully they're looking for reverse mortgages. That's what they're going to find there. But the fact is that there's sex can be good or it can be evil. And obviously drugs can kill you in an overdose, or they can save your life. And reverse mortgages can be good or bad also, because people say, I've heard so many bad things about reverse mortgages. I'm just going to stay away from them. I'm not going to talk about them. Well, that's like not talking to your kids about sex when they're teenagers. I mean, you need to be explaining to your clients what's good and what's bad and how it fits into your overall wealth plan. And it should be used every time that a financial advisor talks to somebody. What's the purpose of sending money to your house if you can't get it back later? Every time a realtor talks to somebody about their retirement home, their fourth quarter house, their last house, they should be using this as part of the equation. Whether or not it makes sense, whether or not they're going to do it, the client needs to know about it. Because I've asked thousands of clients, do you think an uninformed borrower is better than an informed borrower? And they say, well, nobody says, it's a good idea to be ignorant. Everybody knows you're better off with that information. So it should be part of every scenario, not just say, well, I've got somebody that's got bad credit. Maybe they can qualify for a reverse mortgage. I've got somebody that's almost broke, or I've got somebody, it's a widow that can't qualify because her credit score is low, or she doesn't make enough money. It should be part of every client's plan to know. When my son bought his house in his 30s, he called me up and he said, hey, Dad, we're the newest homeowners in Eden Prairie, Minnesota. Come on over and help us move. And by the way, Bridget and I read your book, and we understand that we just started on our reverse mortgage. I said, well, Josh, you're about 30 years out yet. And he said, I know, but when Bridget and I are signing the papers, we realize we're going to get a refund of $2,200 a month when we get to be your age, because that's what we're putting in right now. Now, how many first-time home buyers think that? Well, obviously ones that have been brainwashed by their father. But the issue is that we need to be explaining to people how this wealth works and what to do with it and how to use it when you get to the point of being older. And should I buy a house with a reverse mortgage? Should we stay put with the house we have? Should we help our kids get a house so that we can pass on more wealth? How should that be done? It should be a part of your overall thought process when you're doing planning, when you're doing a presentation for your clients, not just something that, it looks like an exception. This looks like a hard case. Maybe a reverse mortgage would work. That is my best answer, Bill, that they need to know the good and the bad and the ugly. They need to be able to talk authoritatively to be able to at least get them over. They don't have to know everything that I know and Dan Hultquist knows, who wrote the other book. They just need to know where to point them in the right direction and say, watch out, there's some bad deals out there. Right. You need to talk to somebody that knows what's going on, because that's what really makes the difference.
Well, when you do the plan, I think you look at your assets and how to best deploy them. If you have a couple $1 million in the bank, and Wealth Planner will give you some ideas on how to redeploy that asset. If you have, $500,000 or more in equity in your house, how are you deploying it? By not deploying it, you're deploying it, right? By letting it sit there,
Yeah.
in a sense, it's like letting it sit in a checking account at Bank of America at zero interest, which might be okay for some people at certain times, but might not be best for you, and it certainly is not the best for an aggressive strategy for an estate plan. And so the key is to just look at and see how can you best utilize it, and at least ask that question, get an answer on it. One of the things that I'm also on a bit of a soapbox for, as I talk to originators around the country, including movement and reverse originators, is the importance of families having estate plans, and particularly in California, taking title in a trust or an estate plan versus individuals. And it's just amazing to me. I do probate real estate, so I see it all the time, how many people don't. And I talk to originators that say they work with attorneys. I talk to attorneys that say they work with the realtors. And meanwhile, we're just not quite getting the job done as far as getting people, number one, into a plan, and second, getting a plan that's updated. What, if anything, do you do, or would you recommend, or you see as best practices to help customers and to put maybe yourself at the center of that conversation rather than the outside noticing there's a problem when it's too late?
Well, one of the things that we do with all of our clients when we're closing a loan for them, right in the beginning of the process, who owns it? And sometimes there's a situation where the kids own it. They've given it to the kids, which is almost always a bad idea from a tax perspective. Stop 1 second,
because let's just repeat that, because it's almost always a bad idea just to deed the property to your kids while you're alive. Almost always a bad idea. Almost always a bad idea. Okay, we can go for it now. I just had to say that because that's just a bad idea generally.
Yes, so many people think, oh, this is great. That'll beat the nursing home out or whatever. It's going to go to my kids anyhow. I'm just going to do it right now. Oh, my goodness, from a tax perspective and everything else, just a nightmare. And besides that, what if your kids get a divorce? My own uncle did that against my recommendation. He said, I just give my house to my two sons. Well, his one son got a divorce and he gave away 25% of the house in order to stay living in it. So we talk to people right away about saying, hey, why haven't you done an estate plan? Why haven't you done something about, we know what your wishes are. Why haven't you done something? Well, it costs money, and the attorneys cost $2,000, $3,000, $4,000, $5,000 or whatever. If it's complicated, maybe it costs $10,000. I said, that's the first check that comes out of your reverse mortgage. Just use that. My father did a very comprehensive estate plan, and everything was handled. When he passed away at 86, there was no fighting. There was no gray areas. It was all taken care of. One of the best gifts that he could have given the family. That is such a huge issue, Bill. And that's why we try to talk to every one of our clients. They don't all take our advice on it. Some of the clients just leave a mess for their kids. And unfortunately, sometimes they blame it on the reverse mortgage. Right. But we tell them, talk to an attorney that will make sure that it's not a mess at the end. I was driving in northern Wisconsin, and I thought I was something out of Deliverance when I got there. And this guy had asked me to come to his house and had responded to some of our ads or something. And I said, okay, so just give me a little bit of an idea of what you want to accomplish here. And he said, I just want to do the reverse mortgage as soon as possible. I sign some papers and give me as much money as I can, and then we're done with it. And I said, whoa, just I got to know what's going on. I said, what is the purpose of doing this loan? I want to get as much money out because I'm divorced. I hate my ex-wife and I hate all of my kids, and I want to create as big a problem for them as possible. And if possible, I want to leave them a big debt. And I said, well, first of all, you can't do that. And I was never so happy not to get a sale as that particular day, because that's the only person in my 20 years, I've done over 1,000 of these personally, the only person that I've ever run into that wanted to create a problem for his kids. But most people don't want to create a problem for their kids, but they leave it a mess at the end. They need to take care of that. They need to do something about it. Because if they don't do it, there's even from a tax situation, I want to make sure that I cover that. But even from a tax situation, the kids can benefit at the end from a tax scenario. So that's the understanding the taxation issues is a big deal, and you want to involve the kids early. We always involve the kids unless the parents don't want us to. So we get the kids on a Zoom call and say, this is what mom and dad are doing. This is why they're doing it. This is the overall situation.
Well, look, obviously we can go on for a while. Your incredible wealth of information, and we've just touched on about 10 different topics today that I might go a whole episode on. I'm sure we'll have you back and take a couple of these in depth. But whether you're a real estate agent and you want to help your customers by doing purchase loans using the reverse mortgage, or preparing them for the eventual moves with a line of credit, or getting involved with their estate planning, whether you're an estate planner or attorney, get together with Harlan and or your preferred reverse mortgage professional, hopefully one who's focused on reverse mortgage exclusively, to give really good service. Harlan, I really appreciate you being on today. What's the best way for people when to get a hold of you to get more information?
Well, they can reach me directly on the cell phone on the screen, or send me an email directly. Love to visit with them. I give away free books all the time to people that have an interest in learning more about this, so they can certainly reach out from there. And also, just in general, 580 reverse is our national number. If they don't get a hold of me right away and want to go right to that mailbox there. And just as a little bit of a teaser, we should do a future one on how I saved $30,000 in taxes this year. That would be a fun thing to talk about in the future. And they can certainly go to the website that you just pulled up there as well, movement.com/reverse.
And lastly, because I know Movement really well, I've been involved with them for years as a client. Talk about being an impact lender, what that does for the communities that you service.
We're so excited about that. I could go on. That'd be another half hour. But
Yeah.
I'll give you the quick version. We give away 50% of our profits every year to people a lot less fortunate than what we are. Casey, from the beginning, our founder, said, "Hey, I'm not just going to build a company. I am going to make sure that we enrich the communities, every community that we work in, with, of course, nationwide." Since he decided to give away 50% of the profits, we're just north of $400 million that we've given away in the last 15 years. It's incredible. From Central America to Africa to all over inner cities of America, food banks, and schools that we've built. It's powerful to be a part of this. So when you're dealing with us, you're helping a kid with a backpack, a kid with a uniform, save a girl from sex trafficking in somewhere in Central America. We just got back from a vision trip to Guatemala, several of our people. We can make a dramatic difference. It's not just about enriching. Casey doesn't have a multi-million dollar house. He believes in giving back to the communities that we deal with.
And I think you guys, the website says 40 to 50% of the profits of the company go to this. And I'll say this, I deal with a lot of companies that have a corporate kind of giving thing. They check the box. We have one. At Movement, it really is your culture. This is really, it's almost uncomfortable not being a movement lender, working with movement people. You're so committed to this. It's almost embarrassing how committed you guys are, but it's definitely worth knowing that when you work with a company that you're not just, whatever you're charging, a big chunk of the profits go back into communities all around the world. So thanks for sharing that with us again today. Harlan Accola is Reverse Mortgage Director at Movement Mortgage. His phone number is on the screen, 715-207-9991. You can reach him at harlan.accola@movement.com. Harlan, thank you so much for being on today. I really appreciate it.
Thank you. I appreciate your mission of what you're doing. It's going to make a difference in many lives. We're going to change lives together. And thanks for the opportunity, Bill.
Thank you. I think so. I really do. I really think that by educating more people and also giving them a solution to the service problems of the past, we can help people really empower them with using the equity they have, they've worked hard to save, and putting it to power for all of our good use. So thank you so much for helping us on that mission. And for the rest of you, this is the Reverse Mortgage Podcast. We get together every week and talk about ways to be more effective on using reverse mortgages, whether you're an originator or a real estate agent or an attorney or a estate planner or a wealth manager. It's a powerful tool. Let's get together with professionals and help our customers be more effective. You can continue the conversation on Facebook at the Reverse Mortgage Podcast group. If you have questions, referral requests, information requests, do more there. I'm at Bill Gross Probate on social media. Love to have you continue the conversation with us. If I can help in any way, reach out, text, email. Like this, subscribe if you like it. As always, make today your best day ever. Thanks.